Hello everyone and welcome to my November 2025 market update. I'm super excited with some pretty exciting news today, on our market, because we are starting to see that activity come back. Not prices yet, but activity. Let's jump into it right now so I can show you the numbers. Here's the table I put together every month for us to enjoy. Prices are hitting the lower plateau. So what's happened now? Year over year activity for houses, we're down about 4.3%. Prices are also down about 4.3%. Remember, we're talking Greater Vancouver. It changes pocket to pocket. But on average, we're about 4.5% below. Last month, we just had a 1% drop. Attached townhomes, half duplexes, we're down almost 5% activity year over year. Prices are down almost 4% year over year in townhomes, half duplexes, and a 0.3% drop last month. Attached condos, way down year over year. Activity, so that was quieter year over year, but I've got some good news coming on that. Prices down about 5% from this time last year and a 1.4% drop last month. But let's continue and look at some more detailed stats in terms of the different neighborhoods that you shop in. So the metric I look at is, of course, the sales ratio. And the sales ratio basically is the absorption rate into the market of product every month. So what percentage is selling every month? And my regular viewers will know all of this, so bear with me. But if less than 11% of the product inventory is selling in a given month, we're in a buyer's market and there's downward pressure on pricing, and that's what we've been seeing over the last few months. However, when that activity increases above 12% up to 20%, we enter that balanced market territory, and it's not favoring the buyers or the sellers. Prices remain relatively stable. But once we hit over 21% selling in a given month, that's when we enter that seller's market territory, upward pressure on pricing. So that metric is a pretty telltale sign of where we're going in terms of pricing. So let's look at all of the products. So detached houses, Vancouver West Side, here's this year. In summary, we've been hovering in that buyer's market territory. Last month's stats were at 7%, again, well below that, into that buyer's market territory. Let's see what this last month's stat tells us 9%. So we've actually had a 2% increase in detached housing activity, Vancouver West Side. That's a significant jump. We're still in buyer's market territory, but we're nearing that upper edge before it changes into a balanced market. So detached houses, West Side, we're pretty well seeing that, seeing a lot of signs hanging around. We've had many sales over the summer, but again, the majority of them are in that buyer's market territory. But let's continue and look at condos, townhomes on the West Side. Throughout the year, we've been in balanced market territory. Last month was pretty slow in the West Side for condos, and at 11%, let's bring up the stats for this month, we jumped up to 18%, an incredible jump in activity, for condos and townhomes on the West Side. We're in balanced market territory, but in the upper end of that range, 18%. Tremendous activity. And I've noticed that on our tours when we're looking at condos with our clients, some of them are selling, like out of 10, 3 or 4 are sold. We weren't seeing that earlier in the summer. Telltale sign. So let's jump into downtown. Downtown was a little slower than the West Side, pretty well at 11% for the last 5 months. And the stats now, 13%. So we've changed from buyer's market territory to balanced market territory, even downtown. So that's interesting to look at. Let's go into the east side for houses. Last year, we were hovering around the upper end. This summer, we're hovering around the upper end of the buyer's market. Let's look at the stats here. Whoa, 15%. So we've gone from 9% the previous month to 15% this month, well into the middle of balanced market activity. Detached houses east side gaining steam. Let's look at attached product condos and townhomes on the east side. You saw throughout the year that was our most active product in a certain area was attached strata product on the east side. We're at 16% last month. Let's look at where we are now. Whoa, our first product to jump into a seller's market, 21% for east side condos and townhomes. No surprise. We toured with a couple of clients this past week, and many of the units we wanted to see were actually sold. So this is no surprise. We have officially entered a seller's market for attached condos and townhomes in the east side. Congratulations. So that's good news. I think we are at a turning point. We start to see that volume of sales go up, and then we see a little bit of turbulence, and then we start to see that market start to recover. That's my projection for next year. Here's across BC. We can see the same happening. We hit that bottom of activity, and throughout BC, we're still in balanced market territory for all product throughout the entire province with the recovery taking place. So what's happening with prices? Here's my favorite graph, that average price graph for Greater Vancouver. We are still on average about 5 to 10% below where we were in our peak. And you can see that in the houses, a little bit less so in townhomes and condos, significant drop there for average pricing throughout Greater Vancouver. And if we look at the 5-year trend, we're showing the same thing. There's our peak back in 2022, and we're about 10% down, I would say, for houses and townhomes and condos for the 5-year trend. So let's jump right into, let's skip the birds for this month and go right into the provincial MLS pricing. We can see that the residential price, seasonally adjusted, has kind of stabilized over the summer. We've had a few little jumps and peaks throughout that period, throughout the province, but again, on average, about 10% below that peak. Okay, so what is coming? Here's what I think is happening here. If we look at the drivers and the enhancers in green, transitioning in orange, and market price deterrence in red, that consumer confidence was red last month, and it's turned orange because we're starting to see the buyers come back. They're a little bit more confident and certain about coming back into the market. The buyer volumes are increasing, just like I predicted last month with that pent-up demand, especially with the falling rates. And we're seeing the volume of sales increasing as a result. Case in point, those sales ratios jumping, many of them from a buyer's market into a balanced market, and of course those east side attached strata condominium units jumping into a seller's market. That's a bit of a surprise, but good news. And of course the inflation is behaving, economy's weak, and accordingly, that's why our friend Tiff Macklin back east is lowering that overnight rate to stabilize the economy. So he's doing his job. That just happens to be helping a lot of buyers come back into the market. So that's good news. Cost of borrowing, as soon as there's an overnight drop, that directly affects the variable rate. So we're seeing those come down. More good news for buyers. And the inventory levels are holding steady. Again, that's good news. You don't want them shooting up and affecting that supply and demand curve. So buyer confidence, we're starting to see some smiles out there. Buyers are going, hey, we've waited all year, let's buy. It's starting now, wait till you see next year. Unemployment rate, we're pretty consistent, 7.1% in Canada, 6.4% in BC, slight increase from earlier this year. Retail sales, we're seeing a little bit of jumping around in the retail sales, but still strong in British Columbia, and you can see the different categories here where it's very strong, and you can see only one, gas prices, where that has dropped. So people are out there spending, and that's good news for the economy, which is having some turbulence and weakening. So that GDP, because of the projections that the Bank of Canada is making, they're saying, hey, we got to do something now to prop up that economy, thus the recent rate drop, and hopefully another one coming in December. If we're looking at rental rates, we're about $3 a square foot. Rents have softened a little bit. You can see the trend, and they are starting to come back. That's last year. We're starting to see a slight recovery in rental rates, and we see that with those vacancies filling quickly. Another telltale sign that things are starting to turn around. Commercial real estate, you can see, has started to take off this year. Compared to that big slump. So we're on our way back to that peak we had back in 2022. Another good sign of things, mainly inflation. If we look at inflation, we're now at 2.4%. We're at 1.9% last month. But the big news, of course, is that overnight target rate dropping 25 basis points to 2.25%. That was great news on October 29th. And we're expecting another rate announcement on December 10th. Let's do it again, Tiff. Let's keep it going and bring another 25 points in. That's going to further excite those buyers that are out there looking, and even bring some more into the market. And they're doing this, as I mentioned a few times, to support our economy as we go into 2026, all for good reason. And if we look at the consumer price index and inflation at that 2.4%, we're smack dab in the middle of the 2 to 3% Bank of Canada happiness band, where they like to keep inflation. So that's good news. And again, the big ones we're looking at that change from September to September from August, they're about a month behind in the inflation breakdown, is health and personal care went up, gas dropped, everything else from household furnishings, shelter, food, those all had slight increases, causing that 2.4% inflation rate. Okay, we are in sync with our neighbors. Again, we're at 2.4%. We were at 1.9%. The US is at 3%. They were at 2.9%. We're pretty darn close to them. And the overnight rate here in Canada, 2.25%. And the US at 4.13%, and getting pressure to bring that down. So we'll see what happens there. Cost of borrowing, we're starting to see that variable rate drop. And of course, the forecast for the fixed rates, we're going to see some slight adjustments downward, hopefully in the beginning of next year. That would be further good news for buyers. The buying power for today's Cats, pretty well the same as last month. We are at let me pop back to that. We are at approximately 4.9%, so about $533 per 100,000, $5,330 per $1 million borrowed when we're out there looking at properties, so you can do a quick mental calculation. And if we're looking at inventory levels, as I mentioned earlier, everything's pretty stable. These are houses west side. That red line is inventory. That's almost exactly identical to last month. Same with west side condos and east side houses and east side strata condos and townhomes. Very consistent. No dramatic increase in inventory. So we're seeing the volume of sales go up. The inventory stays pretty stable. That means that we're about to see some shifts in pricing. So that's good news. Active listings in BC, again, overall through the province, we've seen a slight drop, but holding pretty steady. What's coming next for pricing? Now, I mentioned this last month, and I'll mention it again. here's my graph. I gotta start dropping a couple years from this because it's starting to get very colorful. But if you look at the average year, you can see we usually see a lot of activity in spring, peaking out in about March, and that tapers off in summer, and then we get another blip of activity in fall. That's your annual cycle of sales activity for Greater Vancouver. Now, this pink line, if you can see it clearly, is this year. Look at how flat it is. It's been flat pretty well the whole year, and it even dropped down in summer, but now we're starting to see an increase in activity. So what that tells me, if you were to calculate all of this volume above that line for your average year, you've got a lot of pent-up demand there for buyers needing to buy that would have and should have bought this year but didn't for various reasons that we are aware of. That's called the pent-up demand that we're watching, and that's going to fall out quickly when it does. So if we're looking at MLS residential sales, we saw that drop earlier this year. We saw a little bit of activity again. If we expand that, here's what's happening now, and that is going to take place and continue to take place across the province and in Greater Vancouver as we near the end of the year, and watch for next year as well. So in conclusion, here's what we are watching. As you know, the mortgage rates, the inventory, consumer demand, those are the three main factors that will influence our market pricing, sales ratios, etc., etc. Bank of Canada overnight rate continues to drop. Big green check mark. Inventory levels remain stable. Big green check mark. Consumer demand and sales are building. That volume's going up. Another big green check mark. More new buyers are entering the market as a result of the lower mortgage rates. Immense pent-up demand is waiting for the opportunity to release, and inflation remains low and healthy. So, I believe that we have hit the bottom in pricing. That is my forecasting. And that the new year will bring an increase in sales and ultimately an increase in prices. Now, the old saying is true. They don't toll a bell when the market hits bottom. Well, I'm tolling a bell. So be forewarned, we may very well be at that bottom of the cycle. If everyone behaves and things go smoothly and we reach peace and harmony with all of our neighbors, it's highly possible that we could have a regularly busy spring market, which would be coupled with increased volumes and, of course, increased prices. So that could be really, really good news if I'm right. Now, the Globe had a really interesting article come out last week, which I enjoyed, and it talked about the winners and losers. And it talks about the change in home prices from 2022, when that last peak was, in nominal dollars and inflation-adjusted dollars for various cities across Canada. So some big losers are, of course, Greater Vancouver, Hamilton, and Greater Toronto. No surprise, the biggest cities get hit the hardest when prices drop, and you can see that. And there's actually some winners in there. Calgary showed increases in pricing, Saskatoon, and also Montreal, and Greater Moncton. So pretty interesting to see those stats since that last peak, and those major cities are affected. They go up the most when the market comes back, and they drop the most when it drops. No surprise there. This is really interesting. There's been a push on all levels of government to increase the rental stock across the country, so we needed more housing. So guess what's happened? These are housing starts by type. So the actual product that's being built, many developers over the last couple of years has decided it's not profitable to build. The city's asking for too much. The costs, the profit left over at current sale prices does not meet a business model that they need to build. So many of them have built rental stock, and you can see this purple line shows 2020. Look at the volume of rental stock being built across Canada. We're over 100,000 homes being built for rent. And homeowner, this is the fourth quarter, homeowners properties you can see have dropped for detached houses, and condo ownership, housing starts have dropped as well. So condos shut right down in terms of pre-sales and builds, and even detached houses dropped right down, whereas that rental stock increased. I think we all know that that happened, but pretty dramatic when you look at it on a graph. And that means one thing: when this starts to happen, there's eventually, when that demand starts coming back, there's going to be a shortage, because you can't build homes overnight. It takes time. You've got to go through the permit process. You've got to acquire land, break ground. There's a big lag by the time that product's available. So there is going to be a point when there's a shortage of housing, high demand, especially for new product, and you're going to see those prices shoot up because of that, because it's all about supply and demand. That's my market update for November 2025. I hope you enjoyed that. I love getting your emails and feedback. Thank you very much. If you'd like to watch this video, it's on YouTube, Instagram, and Facebook. I think we even put it on LinkedIn now. And of course, you can listen to it on YouTube Music, Apple Podcasts, and Spotify. I'm Marty Pospisil. Thanks for joining me today. Have a wonderful November. Christmas is right around the corner.